Welcome to the new series, Charting for Beginners. I'm going to start off today by simply explaining what you're seeing in front of you. No indicators, no extra tools, nothing like that. Just this, right? What is all of this that we see? I meant to grab a box. There we go. What is all this that we see? Right? All you see is just candles and wicks. So let's start there. Let's break it down from the very beginning for someone who's never seen this before but wants to dabble in some trading. All right? So let's just zoom in. Here we are. A little bit more, and we'll stretch that out. All right. So what we have in front of us right now are candles and wicks. Very straightforward. This gives us a lot of information as to where the current stock or Forex is. Forex pair, pardon me. The way that I have it set up is anything that's going up is a green candle, and anything that's going down is a red candle. All right? The most important thing to understand is the top and bottom of the candle body, so that's the part that's colored in, and the top and bottom of the wick, which is the very thin stick sticking out of the top and bottom of the candles. Okay? This part right here, right at the top of the wick, indicates peak of trading zone of that particular time frame. All right, so what that means is, since we're on the daily time frame, just to be aware of that, what that means is within this entire day, this is as high as the prices went, and this is as low as the prices went. Okay, within that day, that means the price actually got that high, and then it dropped further down. Okay, so same as right here, this would be my squiggly line, peak of, do we want to call it a peak or bottom of trading zone? Let's say that, bottom of trading zone for the day. Right, so particular time frame. Since we're on the daily time frame, like I said, that's what that means. All right, let me just reset my crosshair a little bit, just so you don't see any dotted lines. We're gonna keep it quite clear. Crosshair line. No, we'll just keep it white. There we go. Zero opacity. There we go. Just so it won't be any lines drawn up. It'll be nice and clean. Okay, this part of the candle is what's called the open of the candle. And right here, right there, oops, that's a terrible line, sorry. Right there, close of the candle. Okay, so exactly as it says, this is where the price actually opened up, right? And this is where the price closed for that particular time frame. The wick indicates, like I was saying, as high and low as the price actually went, but the open means on that particular day, that is where the price started, and where the candle body ends is where the price finished at the end of that time frame, right? In this case, it's the day. So in other words, open, close, right? And the wicks just indicate the price movement. Now, I may just be repeating myself, but it's very crucial to understand these particular concepts, right? They become extremely important as you start learning how to develop your trading skills, right? Now, you've noticed that there's red and green candles. So what does the green mean? It means exactly this. Let me show you. All right, we'll grab this green. The wicks is the exact same meaning. The only difference is this. Oh, we'll delete that guy. That's it. That's the difference. Green, the open is on the bottom and the close is on the top. Red, the open is on the top and the close is on the bottom. That's all it means. So when you identify which candle it is, right, and how many candles come afterwards, there's particular patterns that you can watch for. But simply in this video, I just wanted to explain what a candle is and what it is that you should be looking for once they open and close. Okay, a pattern like this, for example, where they, for several days, they kind of open and close in the same line, right? That's what you call consolidation, right? So you see open, close, open, close, open, close. It's all within 3 days. It's almost the exact same range. Okay, next day it kind of doubles that range and then pulls back, right? So you can see it's within that similar line that we have there. That is what you call a consolidation. When the candles are pretty much just moving sideways, right? So let's zoom out a little bit just so we have a clear picture. All right. So there we go. This area, all of this, it's called consolidation. The candles are, for all intents and purposes, they're just going sideways, right? Yes, it's a little up and down in between all this, but for what we look for on a daily time frame, this is called consolidation. It's just when the market is pretty flat, like there's very little fluctuation of price. This is, let me grab my proper tool first. I think I'll just use this one. Parallel, nope, it's not there. Parallel channel, okay. So this, something like that, is called a trend. You can see it's moving in one constant direction. Within trends, we're still going to get some consolidation, right? Like we have a little bit here, but it's not as severe as this, as you notice, okay? And of course, this is a downtrend that you see right now. But if we just move the chart over a little bit, right here is where we see an uptrend, right? So another good example kind of goes like that, right? So the trend is going this way. It's showing you clear direction right there. Okay, so uptrend, downtrend, and consolidation. 2 or 3 specific terms that you should understand. Really, it's just 2. It's trending and consolidation, right? Whether it's up or down, it's still a trend. And that's, that's all I really want to convey on the first lesson. Identify your trends, identify your consolidation, and understand what your candle means. I hope that this has been helpful. Please like and subscribe to the videos. And if there's anything that you want me to go over in the future, please write it in the comments, and I'll see you next time.